Hey everyone, and welcome. Today, we're going to tackle a huge question. How do you really understand what's going on inside a company, way beyond just its stock price? Let's get right into it.
Look, anyone can log into an app and click Buy on a stock. That part is simple. But here's the real question, right? How do you know if the business you're actually buying a piece of is healthy? How do you pop the hood and, check its pulse?
Well, that is exactly what we're going to do today. Think of this whole thing as a complete company checkup. We're going to put on our doctor's coats and go step by step to diagnose the true health of a business.
So first things first, before any doctor can figure out what's wrong, they have to understand the patient, right? It's the same thing with a company. We have to start by understanding its fundamental DNA, what's called the business model.
And this quote from Dr. Gary Hamel just nails it. He says that competition isn't really about this product versus that product. Nope, it's about which company has the better business model. Is its core strategy for making money actually built to last?
So what does that even mean? A business model, really, is just the game plan. It's how a company creates something valuable for customers, how it gets that value to them, and, this is the important part, how it captures some of that value for itself in the form of profit. It's the basic blueprint. All right, so now that we understand our patient, it's time to check its vitals. We're looking for those core numbers that tell us if the business is actually breathing and functioning day to day. And a huge one to look for is something called pricing power. Now, what's so interesting here is that these vital signs are not one size fits all. Not at all. A retailer's health is all about foot traffic and how much each store is selling. But a bank, it's all about interest margins. You have to use the right tools for the right patient, otherwise you're going to get a completely wrong diagnosis.
And one of the absolute most important vital signs, no matter the industry, is pricing power. Seriously, think of this as the company's pulse. A strong, steady pulse means it can raise its prices without scaring away all its customers. That's a crystal clear sign of a healthy, dominant business, usually built on an amazing brand or a massive cost advantage.
Okay, so the vitals might look good, but what about defense? How well can this company fight off attacks from competitors? This brings us to the next part of our checkup, examining the company's immune system, its competitive edge.
And to check on this immune system, we've got a fantastic diagnostic tool called the SWOT Analysis. It's just a really simple, powerful way to look at the company's internal health and the external environment all at once. It gives us a complete picture of how well it can defend itself.
First up in SWOT, we have strengths. Think of these as the company's natural superpowers. These are the internal things that make it tough, like a rock-solid bank account, a killer patent, or just an amazing reputation for getting things done.
Now, on the flip side, you've got weaknesses. These are like the company's pre-existing conditions. Maybe it owes a ton of money, or maybe almost all of its sales come from just one single customer. These are the internal vulnerabilities that could make the company really sick if something goes wrong. Now we look outside the company to opportunities. I like to think of these as external health boosters, like a shot of vitamins, a brand new technology pops up, or a new market opens up overseas. These are things happening out in the world that a healthy company can grab onto and use to get even stronger. And finally, we have threats. These are the nasty germs floating around in the environment. Things like a recession, new government regulations, or a scrappy new competitor. These are the pathogens that the company's immune system has to be ready to fight off.
So we've checked the company's basic vitals and we've tested its immune system. But none of that matters if the brain is making bad decisions. So now we have to evaluate the company's leadership. Are they steering the ship in the right direction for the long haul?
And this brings us to a really critical idea called agency risk. This is basically the danger that the managers start acting in their own self-interest, buying a fancy corporate jet or giving themselves huge bonuses, instead of doing what's best for the actual owners of the company, the shareholders. It's a huge conflict of interest you have to watch out for.
And this slide just lays it out perfectly. On the left, you've got the signs of a healthy brain. Independent directors on the board, different people for the chairman and CEO jobs. That's good. On the right, you've got major red flags, shady deals with family members, executives who are constantly in trouble. These are signs of a brain that is not making good decisions.
Okay, we are in the home stretch now. We've done the exam, we've run all the tests. Now it is time to put everything together and figure out the final prognosis. What does this company's long-term health really look like? A really modern way to do this is with an ESG health scan. And this isn't some niche thing anymore. It's totally mainstream.
We have to ask, environmentally, is this company part of the solution or part of the problem? Socially, how does it treat its employees and its community? And governance, which we just talked about, is its leadership actually ethical?
So why should we care about this stuff for the bottom line? Well, a company with a good ESG score often has fewer regulatory problems and can attract the best talent. Simple as that. And a good credit history, that just shows discipline. Both of these are powerful clues about whether a company is built for the long run.
So let's wrap this all up in our Analyst's Toolkit. These are the key questions you need to answer. What's the fundamental business model? Does it have a strong pulse, that pricing power? What are its internal superpowers and weaknesses? Is the brain making good decisions? And finally, what's the long-term prognosis? This is how you build a real deep understanding of a company.
We've just walked through the entire diagnostic process, from head to toe. You now have the framework, you have the tools to perform your own complete company checkup. So the only question left is, what do you think you could uncover?